If your charts are looking something like this, listen up. New traders often begin a quest for the holy grail of trading indicators, looking for that one indicator that when added to their charts tells them exactly when to buy, when to sell, making them an overnight success story. I'm here to tell you that does not exist. Many beginning traders will add things like moving averages, Bollinger Bands, the RSI, MACD, stochastics, and even Ichimoku clouds. After adding all those indicators, you're going to have something that kind of looks like this, thinking it's going to help them make a decision. Well, what happens after you add all those things to your chart? The exact opposite of what you were trying to achieve. There's too much going on the chart to give you a decisive signal or the conviction required to actually take the trade, leading to one of the most lethal human reactions, hesitation. You can't tell me that by removing all of these indicators and making your chart look much more clear, readable, legible, and seeing what is actually happening with the price action, what is actually happening with the support and resistance levels, how the volume is expanding in certain areas. You can't tell me that that chart with all those indicators is more clear than this. All of these indicators that you find going down this rabbit hole of trying to find the holy grail, they're all lagging indicators. They are all giving you a number based off of the price action and the volume happening on the chart. This leads me to the number one indicator, bar none, and that's volume, which is a leading indicator. You probably heard me say this before if you've been to the channel. Volume precedes price. The volume comes before the price moves. This is going to indicate to you when a move is going to happen, not a move is happening like all of the lagging indicators do. Volume is king. If I could give you the keys to the castle and say this is what makes you a profitable trader, it's volume. Let me show you an example from the S&P yesterday. Take a look at the volume here on the S&P when it was pushing up into the 401 level. We have a nice strong push right off of the trend line, right up, push, 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 boom, we find resistance. Our first signal here is going to be this large volume bar on this small candle, right? We have a strong pullback, which actually is increasing volume. Okay, so now we found sellers, and the lower the price went, there's now more sellers. We have another test of it. We can't get through. We can't get through. Look at the amount of volume you have here. See how the volume is like very, very compressed? It's not very high bars. It's very small volume bars happening in an area where we should be getting a breakout if we're going to continue to move. I don't care what any indicator says. This is not enough volume to push through that level. Okay, volume precedes price, and right now the volume is telling me we don't have enough to keep going. Instead, when price starts to turn around, look at this really nice volume ramp that happens. Oof, right? Push, push, push right through. In order to get through a trend line, you have to have expanding volume, right? Well, that's exactly what we have here. This is so much confirmation that we're pulling away from the resistance. We found the trend line with this huge volume bar telling us that when we break that level, it's time to go short. You can't tell me that a chart full of all those other indicators that you decided to put on because you saw somebody else using it is more clear than this. You can't. And even if you tried and pointed out something on the RSI or the MACD or anything, it's all going to be telling you after this happened. Whereas volume is already indicating to you it's time to turn around. Get out if you're long, think about a short. And look at the move that comes from expanding volume, low volume breakout. Look at that. Whoa, huge move. This is on the S&P 500, right? And that's a 2.75% drop before any significant pullback occurs. It's just straight down. Not a single one of these lower highs was broken. Lower high, lower high, lower high, lower high, okay, lower high. None of them were broken until the very last seconds of the day, giving you the ability to pull 11 points out of this move, all from volume. To drive this point home even further, check this out. This is the chart of drug 5-minute from August 22nd, 2022. This happens at 11:30 a.m. if you want to follow along on your chart. Here we have a really nice volume ramp pushing up, a declining volume pullback, which happens right here. This is exactly what you want to see to go long. Explosion of volume again to push up another leg, and then we start consolidating. Another explosion here, but then what happens right here? Now, the RSI, stochastics, the MACD, Bollinger Bands, they're all gonna start saying something once this move begins. But with volume, because volume precedes price, we can see this coming before it even happens. Look at this. We have a huge volume bar here. Look how much movement. Look at the body of this candle. Look how much movement occurred on this much volume, okay? That's 24%. The stock moved 24% on 5.4 million shares of volume on the 5-minute chart. The next candle that comes up has an equally giant volume bar. But this time, the body of the candle is near flat. This is telling you the volume coming in is not buying volume. If it was, then we would have a candle with the same body size as the previous. But instead, we have a high wave candle telling us that this trend is exhausted and we are going into pause phase. The volume is confirming that. Now, if you were looking to get short this move, this is what you're looking for. You want this giant volume bar with this candle. They have to be accompanied together. So at the top of the trend, we get a very significant candle signal on a very significant volume signal. And let's see what happens. We pulled right back to VWAP. VWAP couldn't hold it. We have a little bit of a spike of volume as it fails through VWAP. Now we're going to need a retest to happen, a sort of push back up and then another fail, and it's going to really dump. Here's our retest happening here. Another thing to note here is look at this volume bars. See this? We have a lower bar, an increasing bar, so volume is increasing as we are getting closer to the VWAP. Again, you're now getting the signal. If this volume was buy volume, then this candle body should be larger than the previous body as it has about 30% more volume. Instead, this candle here is about half the size of this one, and it's happening right at this resistance level. So what is this telling you? We are weak. We are still weak. Keep holding short or add to your position. We're going to go ahead and fade right off of that, which was very predictable. Now, with the RSI or something else, it's going to start telling you, hey, we're getting weak around here. This is too late. This is too late. Imagine the stop distance you can get out of this, 10, 15 cents. But if you have to enter as it breaks a new low, you're looking at a stop double the size, which means that your profit targets are going to have to be much further away. Now, this example is going to be on the QQQ, the NASDAQ ETF. Here we go. We have another ramp, expanding volume, looks good for the long. Reduced volume pullback. It's good to take an entry here if you'd like. It pushes up, and then all of a sudden, this last bar right here is less volume than the previous. So now people are getting a little weary. There's not as many people FOMOing in to buy up here. So they're starting to slow down, and they're starting to see, oh, what's going to happen here? What's going to happen here? And the next thing you have happen is this large volume bar comes up, larger than the previous. And the candle that is produced by this amount of fuel, this amount of force with the volume, is actually inverse now. So we have more volume than the previous candle. The body of the candle is about half the size, but it's a red bar now. So instead of that much volume causing it to increase that far, that much volume and caused it to decrease the other direction. And let's see what happens here. Again, right through here, the volume should have picked up. We went through resistance. Why isn't volume picking up? Why aren't people buying right there? Look at that. And then you get this huge volume bar here. That's confirmation, man. If you're looking to go short, you have confirmation to get in. Look at this huge volume ramp that's happening now. If you were to get in on that candle, you're already 3 points in the money. Look at this. See, another big volume bar right through. On the pullback, this is the exact same as a long. You want expanding volume on the way up, reducing volume on the way pullback, and then explosive volume on the way out. Here, we have ramping volume on the way down. This little pullback here, it has lower volume than the move down. And even over here, this was this candle. This is the point where it should have turned around. You get a hammer right at the 5-minute 200, which is what this purple line is. That should have indicated, hey, people are trying to catch this right here. And if it falls below that, again, there's another entry. But how did you know that that candle was valid? Because of the volume. If you can't see the volume on the candle, how do you know that candle's even a valid candle? Maybe the price just moved a little bit and happened to make that candle. The only way you know is by using volume on your charts. You see what I'm saying? Volume precedes price. If I could give you some type of secret key to get your trading to really, really take off and get profitable in what you're doing, you got to incorporate volume because it's a leading indicator. These are things you can lean on. These are things you could use to keep your stops really, really tight. This is actually where I get my conviction to enter the trade and stay in the trade is volume. If the volume on a move is very dried up, like that S&P 500 I showed you earlier, where we should have been breaking out, but instead the volume is really low, this tells me to get out. I don't have conviction anymore. All of that is coming from the volume, not the price action. Price action is giving me levels to work with, but the volume is telling me which ones I can trade with. If you just learn to read the volume and the price bars together, you're going to be far ahead of any trader using some type of lagging indicator like I mentioned in the beginning. MACD, stochastics, RSI, Bollinger Bands, all those things are going to be behind someone who can read the volume. All those indicators are reading the volume and price, and that's what's making them change. But if you can read it bar per bar, if you can get down and dirty with this shit and really understand what it's saying, you're going to be miles ahead of that guy. You're going to really cut your learning curve down, and your strategy is going to become really, really refined. A great place to start your fundamental knowledge on volume price analysis is going to be these books here. These are by Anna Cooling. They're very good. This is almost industry standard for how to read volume price analysis, how to perform it, what you're looking for, what you don't want, what you do want. The second book is going to be about 200 worked examples to really drive the point home. I only gave you 2 here. Imagine having 200. You're going to really get a grasp of it. I hope you guys learned something here today. I hope I added some value to your trading. Now, if you want to get to know more about the 3 indicators that earn their place on my chart, be sure to subscribe, hit the bell to be notified when I drop that. That'll be the next video coming up. And if you have any ideas for a future video, write them in the comments and I'll be sure to get that out ASAP. Have a good one. Peace.